Welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We've got a packed session ahead, covering everything from Bitcoin's muted fear and greed index to bold Roth IRA strategies, plus detailed technical breakdowns on several key crypto assets. Eli, let's dive in. Bitcoin just hit new all-time highs, but the fear and greed index is only at 52. What does that tell us?
That's a telling sign, Maya. A reading of 52 indicates mild greed, not euphoria. In past cycles like 2017, we saw explosive moves. Bitcoin rallied over 500% from its 2016 high to the August peak. This time, it's only about 60%. That underperformance suggests retail investors aren't rushing back in yet. Also notable, Ethereum hasn't hit durable all-time highs, which usually signals true euphoric market conditions.
Interesting. Now turning to personal finance, one viewer asked how to turn $43,000 into $337,000 in 2 years using a Roth IRA. Walk us through that strategy.
Sure thing. The plan involves maxing out annual Roth contributions, $7,000 per year via dollar cost averaging. Allocation, 40% Tesla, 20% NVIDIA, 20% IBIT Bitcoin ETF, and 20% held in cash for opportunistic plays like Broadcom if it dips. But here's the kicker. Instead of static allocation, they're using a rotation model. That means shifting investments toward whichever asset is winning. And over the last 2 years, that approach turned $43K into nearly $337K. It highlights the power of momentum-based reallocation inside tax-free accounts.
Impressive results. Let's shift gears to some technical analysis. First up, SOL USDT on the daily chart. There seems to be conflicting signals here. Can you break it down?
Absolutely. On the surface, you've got bullish indicators like the ADX showing a strong uptrend and EMA crossovers confirming support. However, deeper digging reveals bearish momentum from tools like the stochastic oscillator and zero lag trend. Price is below the ZL-EMA line, and there are no buy signals emerging. So while Fibonacci levels hold, we're seeing signs of exhaustion. Traders should watch 236.41 closely. A drop below that could trigger a test of the 38.2% retracement at 228.35.
Let's move to AVAX USDT. Again, daily time frame. How's the outlook shaping up here?
AVAX looks more constructive overall. It's holding above key Fibonacci support at the 23.6% level, and the buy-hold-sell indicator shows consistent gold signals, hinting at strength. The RSI and MACD both point to bullish momentum, although they're starting to show signs of fatigue. With MFI sitting neutrally around 60, this might be a consolidation phase rather than a breakout. Watch for a close above 31.12. That would confirm continuation.
And finally, let's touch on SUI USDT. Looks like quite a volatile ride lately.
Indeed, SUI has been swinging wildly, with TRP readings exceeding 60% earlier in the week, but things seem to be calming down slightly. It's stuck between the 23.6% and 38.2% Fibonacci zones, signaling consolidation. The stochastic RSI dipped into oversold territory, but price remains below the rising ZLMA, indicating lingering bearish pressure. Until we see a clean break above 3.69, I'd treat rallies as selling opportunities.
Thanks, Eli. Quick summary for our viewers. Bitcoin's rally lacks retail euphoria. Smart Roth IRA rotation models can amplify gains. And technically, SOL shows mixed signals, AVAX holds firm, and SUI needs a breakout. What should traders keep an eye on tomorrow?
Keep watching those Fibonacci zones, especially on SOL and SUI. For broader markets, any movement in Ethereum breaking out or MicroStrategy reacting to Bitcoin's climb will offer clues on whether institutional demand picks up. And don't forget macro factors. Australia's new $6 billion climate commitment could ripple into commodities and infrastructure plays.
Great insights, Eli. Stay tuned for more updates throughout the week. You've been listening to Maya Keynes. Thanks for joining us.